Is President Trump's plan working, specifically when it comes to the economy? Maybe, but let's examine this. Today we're going to go over 5 reasons why his plan may be working and 5 reasons to doubt why it might not be working. Now, at the end, I'll come to my own conclusion and give you my own opinion. But what I want everyone to think about is try to put aside politics. If you love Donald Trump, when I say there are reasons why the president's plan might not be working, just listen. However, there's also reasons why I think the plan might be working. But if you hate President Trump, also try to realize that I'm going to go over all the information, just like we talked about last week, in an unbiased way. So let's get started with the first reason why the plan actually might be working. The stock market is back, and it's back in a big way. Now, I know you might be thinking, well, the stock market was down during President Trump's first couple months. Yes, I'm going to get into that, but let's talk about the numbers right now. The stock market, the S&P 500, right now is at 5,950. So for some context, over the last 6 months, it's up about 0.64%. That's below growth in what the stock market usually is over a few months, but that's important to realize. The stock market has come back, and outside of the tariff situation, especially when President Trump actually comes up with some deals with China or the UK, the stock market loves it. We talked about this last week. Whenever the president makes deals, specifically trade deals, the stock market loves it. It skyrockets up. Now, I know the stock market went down in April because of Trump's tariffs, but we're going to get into that. But right now, the stock market is strong. And I think what's important to think about is there was a lot of fear of the next recession, and a lot of people talked about it. A lot of people from banks, the head of Chase Bank or other banks, said, well, the next recession might be coming. It was a huge point, especially politically, because a lot of people don't like Trump, so they said, look, there's the next recession. A bad couple days on Wall Street, a bad week or two on Wall Street does not mean there's a recession. So the stock market is up. Number 2, job rates are strong. So let's go over some of the employment summary from a couple weeks ago on April. This is coming from the U.S. Bureau of Labor Statistics. Total non-farm payroll employment increased by 177,000 in April, and the unemployment rate was unchanged at 4.2%. This is important because there's been arguments around tariffs, and I feel like all we do is talk about tariffs. But those who agree on tariffs say that they're going to help bring jobs in. Those who disagree with them say it might hurt jobs. But the job market is strong. When it comes to a recession, the job market is way more important than Wall Street because Wall Street grows. Yes, a major crash can happen, but Wall Street isn't as important as jobs. If we all have jobs, if we all make money, hopefully we can afford groceries. Right now, the job market is strong. Hopefully it grows. 4.2% is decent. We want to see under 4%. Now, if it goes up 4.5, maybe even 5%, I think we should start to worry a little bit if it stays there for a while at least. However, if it goes to, let's say, 4 or less, I think we should celebrate, especially if it stays there. So right now, this job market is strong, and many people actually expected jobs in April to go down, especially with a lot of layoffs in the federal government, which is the U.S.'s biggest employer. So the job market is strong. Let's go to the next one, and this is number 3. Consumer fear is down. Now, listen to what I mean by this. Everyone was talking about a recession, and when we look at the recession or the possibilities of a recession, everyone thought the stock market is crashing. Donald Trump is ruining the stock market. He's ruining the country. We were operating at extreme fear. So let's look at CNN Business, the Fear and Greed Index, which essentially from a scale of 0, which is extreme fear, which we all think things are going bad, to 100, which is extreme greed, which things are going so well that I'm just going to take as much money, throw it in the stock market, spend it, whatever, things are going great. Right now, we're at a 70, which is on the scale, it's on greed. That is actually a really good, strong number. Compared to a week ago, we're at 66, which is still greed. Compared to a month ago, we were at 19%. So that's extreme fear. We were down to 3 on the scale of 0 to 103, which is extreme fear when the stock market was falling over those days in April. So 70 people are feeling good right now. So let's go to number 4. Prices are down. Now, this one comes with a huge asterisk because the state of prices in the US is very fickle. Sometimes it's due to politics, sometimes it's due to external factors. So let's go over that. Right now, prices are down. Let's start with the Consumer Price Index summary. In March, we had a negative inflation rate of 0.1%. In February, we had 0.2%. In January, we had 0.5%. In December, we had 0.4%, 0.3% before, 0.2% before that. We're sitting around 3% over the last rolling 12 months in 2024. Now we're down to 2.3%, which is great. We want this number lower, specifically closer to 2 is what the Fed says. In 2022, 2021, inflation was anywhere between 7 and 9%. And again, we're looking at this from the mindset of, is this Trump's economy and is it working? Now, depending on who you listen to, when we get early reports early in a presidency that things are going poorly, that those political figures will blame the previous administration, right? GDP numbers came out. We'll talk about that in a second. On the surface, they didn't look good. President Trump blamed Biden, which I didn't think he had to, because there were actually some numbers in the background that actually backed him up a little bit. But anyways, right now, the economy is strong from March, April, and even February. The 3 full months that President Trump was in, prices are down, and we're looking at 2.3% over the 12 months. Now, egg prices were huge over the last 6 months or so. Obviously, we know a lot of that was due to avian flu. Avian flu caused many issues. We had to kill, I think, like 150 million hens, and prices skyrocketed. When the president came in, prices were over about $8 a dozen. So the president came up with a $1 billion investment plan, which including investing in farmers, making sure the chickens were safe, et cetera, et cetera. From March 5th to prices were around $8.15 per dozen. And on March 19th, just a couple weeks later, $3.72 per dozen. Amazing. That's an amazing number. Now, right now, they're sitting around $3.40 per dozen for eggs, and that's a really good number compared to where it was a couple months ago. Hopefully, what we want to see is maybe closer to $2.50 per dozen. Now, you can say part of it was Donald Trump and his plan. You could say part of it was just the natural healing of the world and the avian flu kind of falling out and the sickness going through the hens. It's hard to say, but right now prices are going down. Gasoline is down. In April, it was up to $2.30. A year ago, we were looking at $2.50 for a gallon of gasoline. Right now, we're sitting about $2.13 for a gallon of gasoline. In 2022, mid-2022, we were sitting at over $4 in gasoline. So gasoline prices are way down. Prices in general are looking better. And here's why this is so important. Everyone said that tariffs were going to cause massive inflation, right? The idea with tariffs are they do cause prices to go up because they're a tax. Someone has to pay that tax. Maybe it's the company. Maybe it's the consumers. Who knows? Someone has to pay the taxes, right? So the idea was consumers are going to get massacred with taxes, with price increases, and we're going to talk about that. But right now, prices are stable. And that's interesting because no one thought they would be stable. And this is a huge winning point for President Trump. He should, from a political standpoint, he needs to go in front of everyone. And he's talked about it, but talk about prices are great. You said my tariffs would hurt everyone. Prices are great. Now, there's a little more to that. A lot of the tariffs have been pushed back, or there have been some deals. But right now, prices are great. Finally, the economy is growing. This one might be hard to understand specifically with the GDP, but try to follow me. So we're going to go into GDP numbers under the negative session. But right now, the economy is growing. And I want to talk about a statement from the Federal Reserve talking about the economy. So the unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. However, inflation remains somewhat elevated. The committee seeks to achieve maximum employment inflation at the rate of 2% over the long run. So in this, the Federal Reserve decided to keep interest rates at 4.25% to 4.5%, and inflation rate or interest rates we're going to talk about in a second. But all indications right now are that the economy is strong and growing. The GDP calculation shows that the economy is down, which I'm going to talk about in a second, under the negative piece. But the economy is strong and growing. Now, I think part of that is due to the nature of the American economy, of the U.S. economy. We have generally a free market. The economy grows and expands. Sometimes it slows down, but it's strong. It remains resilient. And, executive orders from a president may hurt it in the short run, may help it in the short run, but generally the economy grows. So this is a positive thing. This is something that President Trump can put a check under the positive things. So let's next go over 5 main reasons why maybe Donald Trump's plan isn't working as good as we thought. Number 1, interest rates aren't going down. This is actually a pretty negative thing when it comes to the economy, and let me explain why. President Trump has kind of in the media been going at Federal Reserve Chair Jerome Powell, saying he's a coward, he needs to drop interest rates as soon as possible. Well, the chair, Powell, has said he's a little worried, especially about inflation, especially about tariffs, and he's not dropping rates because of this. The economy is strong. Inflation is slowly going down. Jerome Powell and the Federal Reserve team, they're actually worried that something might happen. Now, the economy is strong, like we talked about, but they're not dropping rates because of this. Because something might happen, he's afraid that if they drop rates, people are going to spend more, and inflation will go up, prices will go up, along with potential price increases from tariffs. So interest rates not going down is a bad thing. And if we look at mortgage rates, we're up to 6.81. It got as low as 6.76 just a couple weeks ago. And they're just kind of staying steady. In September, interest rates were down to 6.08 for a mortgage, 30-year mortgage. And now we're at 6.81%. It's not the end of the world, but we kind of want interest rates to go down so we can feel comfortable spending more money and growing the GDP. So number 1, interest rates are not going down. Number 2, and this is a direct contrary to my first part, but this is that the stock market dropped under President Trump. Listen, regardless of what you think of President Trump, love him or hate him, the 2 days in April where the stock market just got blasted, it was Donald Trump's fault. Now, hear me out. If you love Donald Trump, don't get mad, don't turn it off. It was his fault, and let me explain why. He didn't force the stock market to go down, but I think what happened is investors, companies, they said, we don't like tariffs. We don't like taxes. And people got scared, so the stock market went down. People got scared because the stock market was going down, so they started selling more, and eventually it just crashed over a couple of days, right? So it's hard to say, but yeah, it was Donald Trump's fault for a couple of days. I'm not saying it was the end of the world, but here's the thing. once he started saying, yes, we're going to slow down, we're going to pause some of these tariffs, stock market went right back up. It shot up super fast, some of its quickest growth in a long time. So I think it's clear, yes, Donald Trump did cause people on Wall Street to get scared and to sell off a bunch of shares. Whether that's a good thing or a bad thing or a correction or natural, you can debate that. But yeah, this is a negative in his column. All right, number 3, GDP rates are going down. So let's take a look at another thing. The gross domestic product for Q1 2025 was at its lowest in quite a while. It was at negative 0.3%. So what the Q1 GDP calculation actually says. So GDP is essentially consumer spending plus business spending plus government spending minus net exports, which is what we export versus what we import. So the reason why this calculation was so low is because all these big businesses were afraid of tariffs. So they imported a bunch of product before the tariffs were in place. Now, because we imported so much, the GDP rate went down. So it wasn't as bad as we actually thought. When I first saw it, I was shocked. I haven't seen numbers that bad in a while. And in my head, I was waiting to see GDP numbers to reflect how the economy is doing under President Trump. Now, the GDP numbers going down is not a good thing, but we have to really wait till next month or next quarter. Now, you could argue that the quarter could stay down as we've extended a lot of the tariffs, or as long as we pause many of the tariffs, maybe people will continue importing a lot of their products ASAP and GDP may stay down. But right now it's down. It's not the end of the world once you really look into the numbers. The ancillary numbers tell you, okay, GDP is actually not that bad and the economy is actually growing. All right, number 4, fear of inflation is up, especially from the Federal Reserve. Hear me out. Federal Reserve Chair Jerome Powell, whether you love him or hate him, fear of inflation is up. And this goes with number 1. Rates aren't going down because they're afraid that prices are going to go up. Now, best case scenario from Chair Powell is these tariffs will cause a short one-time impact on inflation, right? It's not going to keep skyrocketing, but when we saw inflation rate of 0.2% over a month, maybe we'll see inflation rate of 0.8 in 1 month, and then it'll go back down to 0.2%. That's kind of what he assumed it might happen, what it might look like. But I think what we're looking at is economists, some experts in the economy and finances say inflation might go up. Prices might go up. There's a lot of fear. There's not a lot of proof right now, but there's fear. And this is a negative, right? So this is one of those things like we'll kind of have to wait and see what happens. All right, finally, number 5, there are threats of price increases directly from businesses. And I'm not just talking about economists or from the Federal Reserve. I'm talking about there's threats of price increases from Walmart. Walmart essentially said that they are going to increase prices because of tariffs. Now, Walmart gets a lot of their stuff from China. You know, you can love them, you can hate them. They get a lot of their products from China, and the Chinese tariffs kind of were on pause, and they actually came up with a pretty good deal, but they said, we're increasing prices because we want to make money, which makes sense, right? They don't want to lose money because of tariffs, so they're passing it upon the consumers. Other companies have done this, but Walmart is just the latest in the news saying we're increasing prices right now, and this is because of Donald Trump's tariffs. Now, Walmart is important to the U.S. economy. A lot of people get groceries and other products there, but Walmart is important. If their prices go up, then it's going to hurt the regular people. So this is one thing that is negative when it comes to the U.S. economy. But what are my thoughts on the U.S. economy? I think a couple things. And it's a little mix of the good, it's a little mix of the bad. I think the economy is strong. the numbers show that right now there's reason for cautious optimism. I've used this a lot, but there's a lot of reason for cautious optimism. And I think that the economy is going to keep growing, mostly regardless of what Donald Trump does. Not necessarily in spite of it. I think some things he's doing are going to help. And I think some things, they're going to be a burden on the economy. But generally, I think the economy's strong. I was never one of those people who thought we should panic. I was one of those people that thought that long-term tariffs will cause price increases, but they could also work. I do still have that feeling inside of me that says like something could go wrong at any minute, and maybe not the stock market crash or maybe not even a recession, but something feels like we're kind of teetering a little bit. Maybe that's just me buying into reading everything about the unstable economy, but the data doesn't really back that up. The economy is strong. The stock market is back, granted, after some poor performance. Job rates are strong. This one's important to me because for me, one of the biggest things, job rates are first, inflation is second, stock market's third when it comes to the U.S. economy. So I want to see job rates over the next 6 to 12 months and make sure that unemployment doesn't slowly creep up closer to that 5%. But I feel comfortable. Prices are actually down, and that's a little bit of a surprise to me, if I'm being honest. The economy's growing, although the numbers are a little confusing when it comes to the GDP. So what are my thoughts? I'm cautiously optimistic. The data tells me that the economy's strong and things are going well, and I believe it. I'm a little nervous, but I feel good. I feel like I look at the numbers right now and I keep waiting for something bad to happen. And I thought maybe that happened when GDP numbers came in. But right now, if I'm looking at this from an independent mindset and I look at data, facts, history, the data, facts, and history tell me things are going well. There's reason to be nervous. There's reason to be cautious, but things are going well right now. Thanks for listening. This is our second time together. I hope you keep following. If you want to read more of my stuff, a little more finance-based, go to freedomfinances.org. You can follow us on Freedom Finances X on YouTube. You can follow me on X and follow us at Facebook, TikTok, everywhere you have it. Have a great day. See ya.